Hello and welcome to the next of our full course lectures. This lecture is looking at ethical behaviour. So this is the first of two lectures looking at ethical behaviour. It ties in with our previous lecture looking at ethical theories. And at the end of this little session, we're going to do an illustration that brings together what we're going to talk about here and what we talked about last time. So here we're going to talk about particularly professionalism, linking that in with accountancy and how accountants should perform with relation to the public interest. Also, how accountancy is viewed by society and how we can apply our ethical behaviour as accountants. So that's what we're going to look at here. Let's start by setting out some terms when it comes to professionalism and the profession. So the first of those is the profession. So we are, as accountants, have a profession. So what exactly is that? Well, that profession is a body of theory and skills. So by coming together and learning and acquiring through education the skills and knowledge, we then can enter the profession. So we undertake examinations to enter that profession, and we then become part of that body of theory and skills. We can contribute to it, we can use the theory and skills that we acquire as part of our education to be a professional accountant. Now that theory and skills should therefore be maintained. So even once you are qualified as an accountant, you must maintain the theory and the skills, and you do that by your continuing professional development. So the profession is a body of theory and skills. You acquire it through education, and we're examined to be able to enter that profession. You must then maintain the body of theory and skills by continuing professional development. Other things that the profession has is that code of conduct, of values, of ethics that we've already looked at. So we looked earlier in the course at the code of ethics, and that's administered by the body. And all of the members within the profession will apply that ethical code and the code of conduct. And if they don't, there will be disciplinary procedures to discipline those particular members. So we've got a body of theory and skills, we've got a code of conduct, and that profession will have a duty to society. So by being part of that profession, we need to act in the public interest. Now we're going to look in a second at exactly what the public interest is and think about how we as accountants can act in the public interest. But that's a duty that we have to society because we've built up the theory and skills, and we need to act by that code of conduct. So contrast that with something that is called professionalism. So the profession is not the same as acting with professionalism. To act with professionalism, what we need to do is follow the rules. So there'll be the rules set out by our accountancy body, the code of conduct, the ethical code. We need to follow those rules. We also need to comply with laws and regulations. So that's just general laws, the legislation in the land in which we are operating, and also regulations, maybe industry regulations if we're operating in a particular industry. So we need to comply with those to keep up professionalism. And we need to follow the ethical standards. So we need to follow the ethical code set out by our professional body, but we also need to follow all ethical standards. We need to think about ethics. We need to be considering the societal impact of what we're doing. So that's where we're going to go and look at in this lecture. We're going to think about how accountancy interacts with society, what is acting in the public interest, and how accountancy has a requirement where it needs to try to think about its societal impact. So let's think first of all about this public interest that we've mentioned. So sometimes it's difficult to get a definition of the public interest because it's a little bit unclear. I suppose we could sum it up by saying that it's the responsibility that the profession has to, number one, the clients involved. So as an accountant, you will have clients, or as an auditor, you will have clients. You've got a responsibility to those clients. But the public interest will take in more than just your clients. It'll take in, for example, governments. So you'll have a responsibility to the government to act in a professional way to ensure compliance with laws and regulations, not just of yourself, but of your clients and of the companies that you're actually working in. You'll also have a responsibility to investors. Remember, if you're a finance director within an entity, you'll have been put in that position by the shareholders. You will be there to act on behalf of the shareholders. So you need to have that responsibility to those investors. Likewise, you'll have a responsibility to the finance providers, the banks, those who have provided finance to the business, because again, you need to protect the capital that they have invested in that business. And as a professional, as a member of a professional body, you're duty bound to do that. Of course, that will also include the employees of the entity at which you work. So you've got a responsibility to them not to do anything that could potentially put their jobs at risk. So the public interest takes in all of those different areas. It means that the accountant needs to consider their clients, the government, investors in the business in which they work, the finance providers of the entity, and of course the employees that work within that entity. So as I said, the definition for the public interest is unclear. So we could take it as responsibility to all those people we've talked about. It could be defined as the general welfare or the common interest. So thinking about the general welfare of society, the common interest of people who live and work within that society. So the public interest may well clash with individual human rights. The public interest is thinking about everybody. If an individual, for example, was harming society, well then that individual may not be acting in the public interest. The state may well affect the individual, and again we're thinking about the public interest. The state's interaction with the public may well affect the individual in a detrimental manner, even though it's acting in the public interest. So there may be a bit of a clash between individual interests and the interests of the public as a whole. So when it comes to corporations, corporate entities, well, they're going to have to consider several stakeholders. They'll need to think about, first of all, their own shareholders. So corporate entities, when they're considering the public interest, must first of all think about the shareholders that they have in their own business. They are the investors, they are the ones who own the business, so they may be considered first of all. Then the corporate entity will consider society. And we've already talked about, when we talked about Gray and Adams, etc., about the different stances that the corporate entities may take. And when we talked about corporate social responsibility, we considered how these corporate entities may look at society as a whole and consider them. So what is the accountant's role in all of this? Well, as we've already said, as an accountant, as a professional person, we need to act in the public interest. So that's our responsibility to our clients, governments, investors, finance providers, employees, etc. We need to act within the ethical code, as we've already mentioned. And we need to weigh up the difference between our disclosure requirements under, for example, money laundering regulations and our confidentiality requirements that will come under our ethical code. That will be a bit of a balancing act that we will need to walk, and we'll need to make sure that we get it right. So that's the accountant's role. Let's look at that in a little bit more detail whenever we think about accountancy as a whole. So accountancy and accountants have a key role when it comes to acting in the public interest. That's because the accountant may influence many different areas, and the accountancy profession will influence many different areas. They'll influence those areas through different means. So for example, by providing accountancy services. So by providing accountancy services, bookkeeping services, preparation of accounts, that means we're providing that role to our clients. And what we're doing is we're providing them with a service that ensures that they're compliant with the financial accounting standards. So by providing an accurate and a true and fair description of what's actually occurred, well then that's an influence that accountants can actually generate. So those accountants need to be sure that they're doing the work correctly for those clients, because if they don't, then that could have a direct impact upon them. They also provide audit services, which provide a key role when it comes to investor confidence in financial statements. By having the external audit, that means that investors can take more confidence from those financial statements. Taxation services and the relations with the government that involves. So by providing taxation services, you're trying to implement the government's requirements for taxation. And consultancy services, and that can have a big impact when businesses are maybe struggling. That could have an impact on their employees, their finance providers. By providing consultancy and helping those businesses, we can actually ensure that that employment continues and the finance providers don't lose their investment. So all in all, through all of those roles, we must act responsibly. So the accountants and the accountancy body must act responsibly, whether it's accounting services, audit, taxation, or consultancy work. No matter what the work you're carrying out is, it needs to be done accurately and responsibly. So there are some things that may limit the influence that accountancy can have. So do be aware of those limitations. So the influence that they can have may well be limited by the following factors. So there may be restricted disclosure requirements. So it may be simply that the accountant, whilst acting within the law, isn't actually disclosing everything. So if those disclosure requirements aren't required, well, it just means that the accountant may not have to disclose it. And it can't be the case that the client can be forced to disclose them. So the accountant will have to act within the law and they'll have to take on board what the client wishes. So if the client doesn't want to disclose something and it's not required within the law, well then the accountant must be sure not to disclose it. There's also potential problems with the ethical threats, for example, familiarity. So becoming too familiar with an audit client perhaps, and that's why we have the rules around rotation of the audit partner. So for a listed company, we have to rotate the audit partner after 5 years. For an unlisted company, it's recommended that they're rotated after 7 years. So familiarity can be a problem, and that's not just because the auditor maybe isn't doing their job correctly because they've become too familiar with it. It may be that the auditor becomes too familiar with the client and wouldn't believe that that client would actually undertake a fraud or whatever may potentially happen. So that can be a big issue for accountants. There can also be conflicts of interest. So it could be inducements that the client wants to give you, or it could simply be that you're carrying out two types of work for that client. Conflict of interest is a real issue that accountants need to look out for. Also, don't forget that accountants and accountancy have their own need for profit within their own firms. So an audit firm, for example, is still there to try and make a profit, even though they're there to provide a service for society, to actually audit financial statements to ensure that they present a true and fair view. Well, there's a need for profit. So the testing that's carried out must be cost beneficial, i.e. the audit firm still needs to be able to make that margin. And of course, there's the conflict between audit and going concern. So many times auditors will want to raise concerns that a business may not be able to continue for the foreseeable future, but that in itself may precipitate a going concern issue. So they may be reluctant to disclose that information, and there may well be conflict with the client over disclosing that information. So that's somewhere where the influence may be limited through restrictions placed on the auditor or the accountant by the client, or indeed through some of the ethical threats. So we did talk about how accountancy has a role within society. So we need to think how the accountability of accountancy is important. There have been previous failings of accountants and accountancy. For example, the Enron situation. So the Enron business was a massive business, as we talked about in our corporate governance lectures, and it really failed through a lack of corporate governance. However, the accountants Anderson were complicit in the cover-up on Enron. So what that does is when the public becomes aware of it, it erodes the trust in accountancy. Think even of the financial crisis, the banks that collapsed. All of those banks had clean audit reports. All of them, 100% of the banks that failed had clean audit reports. Some of those reports within 3 months previous to the bank actually failing. Now, when the public hears that, the public thinks, well, is there any worth in audit? And that erodes the trust of the public in the accountants and the accountancy bodies. So we need to be aware of that trust issue. We need to be aware of the accountability that accountancy should have and does have to society. And there is a potential reluctance for accountants to change, to move with the times, to actually work with what's happening in the current market. Several reasons there are for that, such as accountants wanting to follow the rules. Rather than changing the rules or working to move the rules forward, accountants feel that the rules must be followed at all costs. Also, they will be constrained by those various rules, by the corporate governance requirements, by the restrictions in the standards. And that may be and create a reluctance for the accountants and the accountancy bodies to change. It may even be that the accountancy bodies are not interested in changes. Accountants aren't interested in changing things because they know how to do their current job. They don't really want things to change too rapidly because they may not be able to keep up. So those are some of the reasons that the accountants and accountancy in general may well be reluctant to change. However, there are some really compelling reasons that accountants should be at the forefront of changes. For example, the accountants are the ones with the skills. So they have the knowledge and experience to actually know what the problems are, particularly when it comes to financial statements, audit, and the trust that the public has in them. They have the expertise. So if they have that expertise, they should be the ones that are pushing forward changes that will improve the situation. Also, ultimately, those changes may create opportunities to profit through, for example, management consultancy. So it may well be in the accountant's interests to change and to move change forward. Also be aware of the influence that accountants can have on society, particularly when it comes to the distribution of wealth and power. So how does that actually happen? Well, when it comes down to it, the accountants and the accountancy bodies are involved in the oversight of directors. Many of the non-executive directors who will be involved in corporate governance of various companies will be accountants. So they're overseeing the directors, so therefore they have that oversight of the wealth and power within organisations. Also, the accountancy bodies may well be the first place that the government turns to for advice on legislation, for example. So the accountancy bodies and accountants are therefore in a position to provide that advice and to therefore influence what actually happens in the future. Also, many accountants will be involved in whistleblowing within organisations. So it may be that they are a member of the internal audit team and they actually blow the whistle themselves, or it may be that they are part of an audit committee that forms part of the whistleblowing function within an organisation. So that is highly influential. That's an area where accountants take a lot of responsibility and therefore should take that responsibility seriously. So that's just some thoughts on how accountancy relates to the society and how we need to make sure that accountancy itself is accountable to society for its decisions. How are we going to apply all of this? Well, one of the key things we need to be aware of is corporate ethics. So we talked about the ethical code that the accountancy bodies have and that we need to apply in the profession. But what about the businesses themselves? What about those corporate entities? Well, they should have a corporate code of ethics themselves. So what do we think about when we think about corporate ethics? Well, the key aspects here are, first of all, ethical business behaviour. So we're thinking about having a corporation that engages in business behaviour in an ethical manner. So they think about ethics when they're conducting their day-to-day business. Now that's across all of the entities, so we're not just thinking about the directors, for example. We're thinking that we want to ingrain corporate ethics across the entire entity so that everybody within that organisation is aware of the corporate ethical code and applies that corporate ethical code. It really ties into the corporate social responsibility that we've been talking about. So it's a formalisation of that corporate social responsibility. It's setting out the corporate ethics for the organisation and saying, look, this is how we interact with society and with those that we do business with. So what areas will a corporate code of ethics cover? Well, it'll cover things like the mission of the organization. So maybe within that mission, rather than focusing on just the business that you're going to conduct, it may look at the benefits that your business could provide to society. So taking a look at those societal benefits and saying, well, look, that's part of our mission. We don't just exist to make money to benefit shareholders, but we're there to benefit society as well. And that could be incorporated in a corporate ethical code. When it comes to your employees, you could set out a code that maintains the rights of your employees, that treats your employees with dignity, and therefore again will benefit society in that way. It may well that you'll incorporate customer relations into that code. So you may say that you are going to conduct an ethical pricing policy, that the quality of your products will be upheld, again, to make sure that your customers get a fair deal. When it comes to the shareholders, remember, number one aspect of any part of the business is the shareholders. Well, we want to provide them with a return. And maybe we'll vow to provide them with lots of information, with all of the detailed information that they require to manage their investment. Again, looking at suppliers, well, as part of your corporate ethical codes, you may say, well, we want to pay our suppliers on time, or we're going to pay them within a certain amount of time. Again, incorporate that into the ethics, into the business behaviour of that entity. Really what we're thinking about here is the interaction of the corporation with society. So pulling together an ethical code which brings together all of these different areas to benefit society and not just provide a return to shareholders. So the last thing I want to bring in here is corruption. We're going to talk about bribery in detail in the next lecture on ethical behaviour, but I just want to introduce the concept of corruption because it's been highlighted over the last few years as a really big issue when it comes to corporate ethics, even when it comes to finance in general, because corruption is endemic in many areas of finance. So the types of corruption you need to be aware of: bribery, which we're going to look at in detail in the next lecture, but also fraud, which we have seen through many of the Ponzi schemes in the financial crisis, the Madoff scandal, for example. So that was just fraud. Extortion, we've seen as well. And of course, embezzlement. So that's where employees are simply taking money out of the business. So we do need to be aware of all of these general issues. Now, these are a real problem because it's an abuse of power. Often the people who are involved in these have been professional accountants or professional people, and that undermines not just the institutions but the profession in general. So we need to be aware of corruption and we need to try to stamp it out. So the impact of corruption is that, first of all, it will be a big reputation risk. If people become aware of corruption within an organisation, well, they simply won't want to do business with that organisation. If they're investors, they won't want to invest in that organisation. So it can create a real problem from that point of view. It also gives legal risks to that organisation. Again, we'll look at this in more detail in the next lecture because bribery is a real problem when it comes to the legal risks and the liability of the firm it's engaged in. Also, the impact on your staff, well, ultimately, if there's been enough extortion, embezzlement or fraud, the organisation or the entity may collapse, and that will have an impact on the staff because they'll lose their jobs. And ultimately, this all feeds through to a financial cost, and that will be a financial cost that's borne either by the shareholders or indeed by society as a whole, and we want to try to avoid such financial costs. So let's try to bring this all together. Illustration 1, we're going to look at all three parts of an exam question here. We're going to consider what we've talked about here with corporate ethics, and we're also going to bring in a little bit about ethical theories that we looked at in the last session. So we're going to look at deontological and teleological as well. So I want to bring this all together because if you do get a question on ethics, it will tend to bring in all aspects of ethics. So we need to be able to deal with that. So read through the scenario, make sure you understand it before you maybe attempt the questions, or indeed just work through the answer with me to learn from it. The first requirement of illustration 1 is to describe the purposes and typical contents of a corporate code of ethics. So we'll look at the purposes first and then the typical contents. So the purpose of the code of ethics, well, there's several purposes you could look at here. To convey the ethical values of the company to interested audiences, including the employees, customers, communities, shareholders, all those people we mentioned in the lecture. To control unethical practice within the organisation. That'll place limits on the behaviour and also prescribing behaviour in given situations, so the code will give guidance in those areas. To be a stimulant to improved ethical behaviour in the organisation by insisting on full compliance with the code. So by having that code and insisting it's fully complied with, we can get that ethical behaviour that we want. So what are the typical contents of a code of ethics within a corporation? Well, we talked about some of this in the lecture, so some of these will be the same. So first of all, the values of the company. So this might include notes on the strategic purpose of the organisation, any underlying beliefs, values, assumptions, principles, all those things that we talked about when we looked at the mission. The shareholders and suppliers of finance also will be included in this code of ethics, in particular how the company views the importance of sources of finance, how it intends to communicate with them, and any indications of how they will be treated in terms of transparency, truthfulness, honesty. So you could include all of that in your code of ethics to ensure you treat shareholders and suppliers of finance appropriately. Employees, of course, will be included. Policies towards employees might include equal opportunities, training, development, recruitment, retention, removal, all of those areas. In the case of the scenario for HPC, the policy on child labour will be covered by this part of the code of ethics. So we'll think about how we're going to treat our employees and include it in our code of ethics. Customers, so how the company intends to treat its customers, typically in the form of a policy of customer satisfaction, the product mix, the quality of your product, the information you give with it, the complaints procedure. So all of that could be included in the code of ethics. A supply chain and suppliers is very important. An ethical policy on the supply chain might include undertakings to buy from certain approved suppliers only, or to buy only above a certain level of quantity or quality, or to engage constructively with suppliers, or only to buy from suppliers who meet your own ethical standards, not to buy from anyone else. So all of those could be included to make sure that you've got an ethical approach to supply chain management. Lastly, community and the wider society. So this section will concern the manner in which the company aims to relate to a wide range of stakeholders. And that's who, with people it doesn't have a direct economic relationship with. So just the community, wider society, how does the company consider those? The second requirement in illustration 1 talks about strategic positioning, and we're told that this is about the way that a company as a whole is placed within its environment and concerns its fit with the factors in its environment. So it says, with reference to the case as appropriate, explain how a code of ethics can be used as part of a company's overall strategic positioning. So this is looking a little bit at P3 information here, so let's see what we can come up with on this. So strategic positioning is about the way that the whole company is placed within its environment as opposed to the operational level, which considers the individual parts of the organisation. So here we can say that ethical reputation and practice can be a key part of environmental fit, along with other strategic issues such as generic strategy, quality, product range, that sort of thing. So the fit enables the company to more fully meet the expectations, needs and demands of its relevant stakeholders. In this case, it will be the European customers we need to consider. So the quality of the strategic fit is one of the major determinants of the business performance, and so it's vital to the success of the business. We need to get that strategic fit correct. So HPC has carefully manoeuvred itself to have the strategic position of being the highest ethical performer locally, and it's won orders on that basis, so we can start to see where ethics is fitting into its strategic positioning. So it sees its strategic position as being the ethical benchmark in its industry, both locally and nationally, and this protection against its parent company seeking to impose a new code of ethics. So it wants to avoid that new code of ethics. So the ethical principles are highly internalised in Mr. Hogg and the company generally, which is essential for effective strategic implementation. So they've effectively made the code of ethics part of their strategy. So moving on to the last requirement here in illustration 1, we have to assess Mr. Hogg's belief that employing child labour is always ethically wrong from deontological and teleological ethical perspectives. So we talked about this in the previous lecture, so let's make sure that we can remember it. So first of all, looking from the deontological perspective. So in the case scenario, Mr. Hogg is demonstrating a deontological position. So he's saying that it's always wrong to have child labour. So he's adopting an absolutist rather than a relativist or situational stance, i.e. it's an absolute stance. He's saying there are no situations where child labour might be ethically acceptable, and that's a deontological perspective. So that view is that an act is right or wrong in itself, and it doesn't depend on any other considerations. If it's wrong in one situation, it will be wrong in all situations. That is the rule. So the fact that it might cause favourable outcomes in some situations does not make it ethically right, because the deontological position is not situational and the quality of the outcome is not taken into account. It doesn't depend on the situation, it's simply right or wrong. And if it's wrong in all situations. Looking at it from the teleological perspective, according to this perspective, an act is right or wrong depending on the favourableness of the outcome. So we do look at the consequences. So therefore it's sometimes called the consequentialist perspective, because the consequences of the action are considered more important than the act itself. So in this perspective, ethics is situational and not absolute. So therefore child labour is morally justified if the outcome is favourable. The economic support of a child's family by provision of wages for the family support might be considered to be a favourable outcome that justifies the child labour. So there's an ethical trade-off between the importance of the family income from the child labour and the need to avoid exploitation and therefore interfere with the child's education. So you need to look at the consequences to decide whether the act is right or wrong. For HPC, child labour is likely to be cheaper than adult labour, but it may alienate European buyers and be in breach of its code of ethics. Therefore, child labour may be ethically acceptable if the negative consequences can be addressed and overcome. But that's only from a teleological perspective. An absolutist view would be that it is always wrong. That then was our lecture on ethical behaviour. We will move on to look at this in a bit more detail in the next lecture, specifically looking at bribery and other such areas.